Dear students, today we are going to see Unit 11 Reserve Bank and its departments. So, Reserve Bank and its departments. So, this is coming under economical environment. What are the various contents we are going to see in this unit? The Reserve Bank and its departments, the department functions, issue department, department of non-banking companies, major functions of RBI. These are the various areas we are going to see in this unit. The Reserve Bank of India is a central bank of our country. So it is started pre-independence itself. That time itself, they are under the aim of having a centralized monetary system. British people, they had idea of having one central banking system throughout the country. It aims at the promotion of monetization and monetary integration of the economy. Throughout the country, there must be a regulatory system. For regulating the monetary and economy, there must be a organized wing of banking system. Only when they have the organized system only, the proper rates, currency, control, everything can be executed. It aims at the promotion and monetization that we saw, and then filling in the credit gaps and gaps in the financial infrastructure. So, RBI is the main one, and it started during 1935 itself. It started. So, we have many departments, that is, RBI have many departments to carry out different areas. To carry out the work effectively and economically, the Reserve Bank of India is classified into the central office divided into many department functions. There are many departments. The RBI's major functions of its departments are the banking department. So one is the banking department. The banking department is responsible for rendering the bank's services as a banker to the government and to the bank. So, banker to the bank and banker to the government. So, banker to the bank, there are various functions. Banker to the government, there are various functions. We'll see that. Then, four subdivisions: public account department, public department, deposits account department, securities department. There are 14 branches of banking department having functioning. This banking functions are accepting the deposits and lending the money. This is their main area of banking. Now, issue department, and then currency management, department of expenditure and budgetary control, Okay, so let me see what are the banker to the bank and government bank. I think these functions we are going to see at the end of this PPT. So I'll explain those things. You will be having the examination, the questions. In case if it is subjective type of questions, then what are the various banking functions? So banking functions are normally accepting the deposits and lending money as loan, accepting deposits for a lesser interest and lending the money for higher interest. The variation of the rate of interest is their profit. So when we see what are the types of deposits, we have more deposits, more number. That is four main areas of mm, deposits: savings bank account, current accounts, recurring deposit, and fixed deposit. These are the four major areas of accounts. Savings bank account a normal citizen can open, as everybody, as we all open the account, the bank. Current account normally business persons alone can open, because the number of deposits and withdrawals are unlimited over there, and there is no interest, and overdraft facilities available in the current account, and current account alone can be opened by the business person. Once they are entering their entity, then current account only they can use it. And then recurring deposit, every month the amount will be paid, every month certain amounts, 5,000, 1,000, 2,000, any number. So they will pay up to 12 months to 60 months, the duration it is there. And then fixed deposit. The fixed deposits are one lump sum amount paid in the bank, 1 lakh, 2 lakh, 10,000, 5,000, whatever it may be. And for that, the interest will be given by the bank. That is fixed deposit. These are the four types of deposits the banks they are collecting from the customers. And loans, nowadays banks are giving many types of loans. They have more types of loans. So housing loan, jewelry loan, customer personal loan, vehicle loan, many types of loans they are giving. Okay. Now we'll pass on to the next department, issue department. So what is this issue? Issue is banking. The issue department is concerned with the proper and efficient management of note issue. So the RBI is one of the major duty, the responsibility, work, everything we can say that issue of notes. Only RBI can issue the notes. No other person can issue the notes. So for the conduct of monetary transactions, the country has been divided into four circles of issue, each having an office of issue, the branch of issue department. So the issue department having 14 branches, and those branches alone can execute that. So issue department is concerned with the issue of currency. Next, the currency management. There is a system, if too much of flow of cash in the society, then what is happening? Prices will go up. If too less, again problem. Rates will get increased, production will get stopped, all those things will happen. So it must be a proper regulatory system. The system must be proper regulatory system. The flow of cash must be in a correct way, correct manner. So this department is managing with the currency. It concerned with the forecasting of the long-term requirement of the currency. What is long-term requirement? So after 10 years or 5 years, what may be the requirement of the person? So based on that, the currencies will be issued. Previously, the system was what is the gold? How much gold is there inside? Only that much currency is issued. Then next, previously it was like that only. Even that olden days itself, The currency, when currency started in the market, they issued gold coins, gold, silver, king, king ruling the time. So the currency, that coin, gold coin, when we melt that, the value we will get it. So that was the system prevailed in the olden time. Then afterwards, next. Now the ratio of keeping the gold and foreign reserves in the treasury, and according to that proportionality the currencies are being out, then only our economical condition will be in the stable. So these reserves and gold, the the reserves of the gold and foreign exchange reserves should be maintained properly. According to that, the currency is managed. So this department is headed by the chief officer. The next comes budget and budgetary department. Budget means the what is the cost, how the particular thing going to be executed, the cost analysis. This department is concerned with the preparation of bank's budget and monitoring of the expenditure of the different units. So they have the different units. So what is the requirement of cash, the expense for the next year? They'll budget it and the amount will be allocated for that. It is headed by financial controller. So budget and budgetary control, advantages and limitations. So maximization of profit, advantages are the maximization of profit, efficiency, specific aims. So maximization of profit for each and every activity, we will see to that it should be maximize the profit. It should be efficient. Only when we budget, only we can know. It should be efficient. For each and everything, there must be a specific aim. The performance should be valued. Then the costing, corrective action in case of anything wrong goes, then cost goes higher, then it should be reduced. The policy formation, all these things are advantages. The budget plan is based on estimate. Only when we estimate and we plan, but all the time we cannot say that estimate alone can be executed. There may be some variation. In case of variation, again the problem of deficit comes there. Budgeting is only tool of management. False sense of security. Sometimes these all the time, whatever we budget, whatever we do, that thing alone can be happen, that we can't estimate like that. Sometimes it may go differ also. So for each and everything, there will be some advantages and disadvantages. So what are the various activities carried out by the Department of Expenditure and Budgetary Control? So they establish budget, they make policy, they compare with the previous and current, they correct wherever it is required, and they place the responsibility for each and every activity. These are the major areas of the Department of Expenditure and Budgetary Control. This department is concerned with the preparation of the bank's budget, monitoring, expenditure, all these things headed by the financial controller. Now, the Department of Government and Bank Accounts. This department is concerned with the maintenance and supervision of the bank accounts in the issue and banking departments, and the compilation of weekly statement of affairs and the annual profit and loss account and balance sheet. So for us, there is one bank. The same way, RBI is the government bank. For us, Indian Bank will be there, Indian Overseas Bank will be there, Canara Bank is there. The like same way, for the government, RBI is a bank. It is headed by the chief accountant. Exchange Control Department. What is exchange control? An exchange control means foreign exchange. Exchange means foreign exchange only. We are exporting some product and we are importing some product. In case when we import, we should pay in their currency. In case we export, they pay in our currency. So these things were there. So what is the rate of this exchange? For how much rupees we should pay for getting $1? These rates to be controlled, and it is RBI's Exchange Control Department. The Exchange Control Department is responsible for controlling foreign exchange transactions and maintaining exchange rate stability. Next, Department of Banking Operations and Development. What is this department is doing? The department was entrusted with the responsibility of the supervision, control, and development of the commercial bank system in the country. So this department is doing supervision, control, development of the commercial bank. This is so they are concerned with the bank. They are the bankers' bank. So there we saw that particular function. That is this. This department is executing that function. So bankers' bank. We keep money with the bank. Our deposits with the bank. The same way, all the banks they are keeping reserve with the reserve bank. Statutory reserve. They keep some reserve. They keep certain reserve with the RBI. And whatever the rates RBI increases or decreases, whatever happens, that the commercial banks are required or obliged to follow that. The rates may get increased or get decreased, whatever it may be. But RBI, that banks must obey with the RBI rules and regulations. Department of Non-Banking Companies. So non-banking companies, there are certain companies which does not execute the banking functions. They have the different functions, non-banking functions, financial services, non-banking financial services, NBFCS. So what are those areas? So they credit planning cell, Department of Economic Analysis and Policy. So they analyze the economical situation of the country and they frame policies according to that. So the Department of Statistical Analysis and Computer Services. So this department analyze the statistical data. What is the inflation rate, or if any, what is the currency rate, what is the foreign exchange reserve, how much exports, what is the import, all those things. Legal department, if any cases are there, those cases will be handled by the legal department. So they don't do any banking functions, but they are coming under the RBI department. Inspection department. So what does this inspection department do? A sudden visit to the departments, banks. So RBI suddenly inspecting the other departments, that is other banks, commercial banks. So RBI have the right to visit any commercial bank on any day with a prior notice normally. Now, the RBI is executing the training establishments in order to give proper training to the employees to make it effectively and efficiently. The Reserve Bank has set up three prominent training institutions for imparting training in different areas of banking. These are the Bankers Training College, the College of Agricultural Banking, the Reserve Bank Staff College. So these things were there. So they execute training also. So the functions of RBI all put together. From the beginning, we are seeing all those are functions only. Now this is put together. Monetary authority, they issue note, they control the monetary. Regulator of financial system, they control the monetary system of the economy. Managing foreign exchange, banker to the bank, banker to the government, detection of fake currency. So RBI, they have separately the for each currency note, when we see so much of designs will be there inside. Some silver lines are there. Only the persons those who are much familiarized over those designs only can able to find out whether it is a correct note or fake note. There is a mission for that, and that mission will detect if there is any fake note. That is also there. On the issuer of currency, only RBI is issuing the currency, and bankers bank, development functions, regulator and regulator of payment and settlement. So RBI is a regulator and payment and settlement. So they had the control system, the payment and control system. RBI is a financial, that is a finance authority, judiciary, parliamentary, and finance. So RBI is heading the finance sector of the country. So the major functions, as we saw already, it issue notes. So RBI is issuing the notes, except a 1 rupee note, which are issued by the Ministry of Finance. Nowadays, the 1 rupee note arrival got reduced only, and uniform, because why only RBI have to print? Why not we all can print? If the particular right is given to each and everyone, what will happen? Everyone will print, and there will not be any meaning for this currency at all. It makes possible effective state supervision. It is easier to control and regulate credit in accordance with the requirements in the economy. It keeps faith of the public in the paper currency. So we will have the faith. Suppose 2000 rupee note we have, here it worth 2000. If everybody is printing, what will happen? Okay. So the detection of fake currency, there is a machine. That machine will find out what is fake currency and what is original currency. So the banker to the bank, we saw already what is this banker to the bank. A banker to the government. The Reserve Bank manages the banking needs of the government. It has to maintain and operate the government's deposits. Banker to government, it has to maintain and operate the government deposit account, whatever the government is depositing, all those be in the RBI. It collects receipts of funds and makes payment on behalf of the government. So whatever may be the income or the expenses to the government, all those things are maintained by the RBI. It represents the government of India as a member of IMF and the World Bank. So RBI is the government bank. Wherever the RBI is not there, in metropolitan cities only RBI is there. Wherever it is not there, there in that areas, State Bank of India is executing the RBI's function. So with this, we end up this unit. Go through the lecture notes and try to complete the assessment. So thank you.